On the show now is Kunal Shah, head of commodities and currencies at Nirmal Bang. Kunal, hi. It's metals all over yet again. And while we did see some gains in the previous week, we've started again on a weaker note. So yesterday and today, we're down by nearly 2 to 3% for many of these metal prices. Add to that the fact that the China manufacturing PMI data also has come in on the weaker side for a second straight month. I'll start with zinc first, and that continues to be an underperformer.
Yeah, so for zinc, the fundamentals are that the smelters from the Europe are starting the supply, restarting the production after last year of energy crisis. So the supply from Europe is increasing and the steel production in China is going down. So the major demand for zinc is coming from the galvanizing of steel, and that sector in China, which is the largest producer of steel, is going down, and the property sector of China continues to remain under problem. So looking at all of these fundamentals, zinc prices have gone down significantly. So from present levels, 90% of the bearish news are already priced in. So we've seen zinc going down from 310 rupees today almost 207, 208 rupees. So I think 90% of the bearish fundamentals have been factored in the price. I'm not expecting any meaningful crash from present levels. We are expecting some bit of cool down from here, maybe perhaps to the level of 200, but I think this is not the time looking at the Chinese PMI data and reacting and going short on metals positionally. So I am of the view that in days to come, we are going to see RRR cut from China or a sort of stimulus package from China. It is quite imminent going forward. So even though the fundamental looks bearish, 90% of the bearish fundamentals are in the price right now.
Okay. I also want to talk about copper, which is called the Dr. Copper for a reason, that it shows you it's seen as a barometer for the global economic growth going forward. With the way copper has reacted, I mean, we've seen nearly 5.5% of a decline just for the month of May onto this one. Would you say the same thing, that much of the bearish news is how we should read it?
Yeah, so we should not basically just because Chinese PMI data is not good, or the Chinese property sector is not doing good, but a lot of this has been priced in. So going forward, what are the triggers? So I see that in the second half of the year, you may see some stability coming back to the property sector. China's government may act after such a weak numbers consecutively from last 3 years. After they've opened up their economy, January, February, March, we've seen some meaningful recovery, and that has been faltering in April and May. So some measures are expected from the central banks and from their government going forward. So 690, 695 for copper on MCX seems to be the area where one can do the bargain buying, and perhaps there is no major reason, but just because most of the worst has been priced in, I'm slightly taking a contrarian view right now that any decline of 2 to 3% from here is a good buying opportunity for most of these metals.
Would you say that a 60% probability of a 25 basis point rate hike on 13-14 June, when the next US Fed meeting is on, also has been factored in?
Okay, so rate hike is not so even if they do not increase the rate, or they come up with a 25 bips of rate hike, but I am very confident that we are going to see pause after that. So 25 bips after humongous rise from 0 to 5.25, I don't think so 25 bips will matter a lot. So, but I'm very confident that going forward, there is going to be a pause. Major central banks, maybe Fed or ECB, they will like to see after the pause whether the inflation is coming down or it is not. And after that, they will review it whether to increase or not. So pause is imminent, and that is one of the reasons for me to believe that there is a possibility of bargain buying arising at these levels. So I'm expecting a pause, no matter 25 bips of hike. I don't think so that's a bigger issue, but the pause is imminent.
All right. What's your sense on aluminum now? Because we're trading at a 7-month lows onto this one too, and we do understand that the production here also seems to be increasing, whether it's China or Europe, and demand not as so strong. When is it that the markets clearly are waiting for demand now more than anything else? Do you see that come back in third quarter, fourth quarter?
Yes, aluminum is one of those metals which have not corrected sharply in line with the other metals. And earlier, the main reason was the production cut in China. But every time we see this news from production cut of China, and after 2 months, you see the numbers doesn't indicate that. So aluminum market right now needs a major trigger from the demand side, which eventually should come in the third quarter or fourth quarter with the improvement going forward. So like I'm expecting some sort of stability in the second half of the year from China, not a very bullish scenario. So aluminum also around 200 rupees, 201, 202 on MCX, on Indian bourses seems to be the bottom. And we are not going to see any major crash from here, 2-3% downside in aluminum. Maximum I'm expecting. Worst is priced in most of these metals. Any meaningful downside from here is a buying opportunity.
And would you say that even as you're expecting the higher rates to continue for a longer time, I mean, what would that mean for economy and demand growth going forward? That is one. And also, by the end of this year, which metal would you want to bet on the most?
Okay, so that's very interesting. You know, if the rate stays longer, what is going to be the impact? So I'm expecting maybe in next 2-3 months we are going to see some slowdown, some bit of slowdown taking place in US. So far we haven't seen any. So that is also going to limit the upside on the metals. But whenever there is a buying opportunity arising, I think the most preferred metal would be copper because of its usage in the EV and the other green technologies. So copper seems to be the most favored metal. So maybe from here 680, 690, these are the levels, you know, where one can go long in copper. 730, 40 should book profits. But I'm not expecting a runaway in any metals because of the reason you said, that the interest rates are going to stay at these levels for quite a bit of time, 3 months, 4 months, I don't know. But that is the time where we are going to see a real weakness coming in the in actual economy. So at that time, the upside is also going to be capped. So no major bullish trend, but a bounce back is very likely going forward.
All right, Kunal and Manisha, thanks a lot for joining in. So no major bullish trend in the commodity markets, even in the equity markets actually. The trend